Hi guys, my name is Sahil and welcome to my Personal Finance Academy. If you have been watching my videos, you would know that I have recently launched a video on top 18 large cap and top 10 mid cap stocks. Now many of you asked why I have not selected chemical and pharma companies. Well, because I have selected them in the small cap category and you will find them in this video of top 10 small cap companies. In fact, 5 out of 10 companies on my list are from chemical and pharma sector. Also, some of you mentioned great companies like Balkrishna Industry, PI Industry, Mahanagar Gas, etc., which unfortunately I could not include in my top 10 mid-cap list. In fact, there are many great pharma companies that I could not include in the large cap list. But don't worry, next Sunday I am going to post a crazy video on my personal curated list of almost 100 plus companies in the universe of 6,000 plus listed company in India that I personally track for my investment purpose. These companies are the gems of gems. I am sure you would highly appreciate this list. Guys, one quick update. There are some scamsters commenting with my profile pic to WhatsApp or email them for stock advice for investment. Please do not reply to them. My official website is mentioned in the description box and pinned on the comment section. And before we proceed, this video is only for long-term investors to understand the business of each company and its future growth prospect. If you are a short-term investor looking for buy and sell price, then you can skip this video. And it is very difficult for me to explain every concept. So if you want to learn everything in detail and in a structured manner, then you can explore my course on everything about money management. As I mentioned before, in my top 10 mid-cap multi-bagger list, I don't randomly pick stock to create video. I do an in-depth research about the company and its business, its management, competitive strength, key risk, financial health and future growth prospect. Alright, let's start with our list of top 10 small cap stocks. Number 10 company in the list is from IT sector. It is Happiest Mind. Established in 2011, Happiest Mind is a digital transformation, infrastructure, security and product engineering services company. It has a tagline of Born Digital, Born Agile, which clearly tells that the company is focused on digital technology and agile business. In fact, 97% of the business of Happiest Mind is from digital themes including IoT, blockchain, cloud, big data, advanced analytics, etc. Since 2019, Happiest Mind revenues have jumped from Rs 590 crore to currently at Rs 739 crore by December 20 at a CAGR of 13.7%. The profits have increased from 14 crore in March 19 to Rs 132 crore by December 20 at a CAGR of 260%. That is an insane growth number. Happiest Mind recently had an IPO in September 20 at a price band of Rs 166. It got an amazing response and the share was listed at a premium of 111% at Rs 358. And currently it is trading at 393 in February 21. So it is just the start of stock market journey of Happiest Mind. Currently, it has a market cap of Rs 5,800 crore. If you look at the future, guys, needless to say, the future is digital. Be it e-commerce, online education, online payment, online health checkup, everything is going digital. In fact, there is a parallel economy being built in the digital world. And it is just the beginning. There is a long way to go and that would certainly benefit companies like Happiest Mind. Number 9 company in the list is from food sector. It is Tasty Bites. Established in 1995, Tasty Bites is a leading brand of ready-to-eat products. It basically operates in two categories, consumer category and food services. Consumer business include ready-to-eat and easy-to-cook, all natural and preservative-free food including Indian and Asian cuisine with a balance of taste and nutrition. Food service is a B2B segment where Tasty Bite offer a range of products including sauces, meals and frozen food to various QSR chains, cloud kitchen and Horeca, that is hotels, restaurant and catering segment. Some of its clients include Jubilant Foodwork, Burger King, Pizza Hut, etc. Since March 2010, Tasty Bite revenues have jumped from Rs 68 crore to currently at 426 crore by March 20 at a CAGR of 20%. The profits have increased from 7 crore in March 10 to Rs 41 crore by March 20 at a CAGR of 20%. Tasty Bite had an IPO in March 17 and since then its share price has jumped from rupees 4,600 to currently at 14,210 at a brilliant CAGR of 32.5%. It has a market cap of 3,600 crore. Guys, if you look at the future growth, there's an increasing demand for ready-to-eat food due to increasingly busier lifestyle. Moreover, people now prefer healthier alternative with focus on taste. Some of the other factors including rising young population preferring new cuisine, consolidation from unorganized to organized player in food services and rise of cloud kitchen. All these factors would contribute to the growth of Tasty Bites for a long term. Number 8 company in the list is from breweries and distillery. It is Radico Khaitan. Established in 1943, Radico Khaitan is a Desi company making English daru. Radico Khaitan operates in various categories of liquor including whiskey, rum, brandy, vodka, gin and ready to drink. Some of the popular brands include Magic Moment Vodka and Morphus Brandy. Company has recently launched many new brands like 8 PM Premium Black Whiskey, Jaisalmer Indian Craft Gin, Rampur Indian Single Malt, etc. Radico Khaitan revenues have increased from rupees 923 crore in March 11 to rupees 2,309 crore by December 20 at a CAGR of 10%. Its profits have jumped from rupees 73 crore in March 11 to rupees 235 crore by December 20 at a CAGR of 12.7%. In fact, in the last 3 years, company's profits have grown at a CAGR of 45% after the company has launched various brands in the premium segment. In the last 5 years, Radico Khaitan shares have jumped from rupees 100 to currently at 542 at a CAGR of 40%. It has a market cap of rupees 7,250 crore. If you look at the future, there is increasing consumption of liquor. Factors like increasing young population entering drinking age, increasing income and spending of branded liquor and greater acceptance of social drinking would continue to fuel the growth for Radico Khaitan as drinking become more and more part of lifestyle. Company is investing heavily on brand building and product portfolio building to cater to the growing trend of premiumization and aspirational brands in India as well as export the product all over the world. Number 7 company in the list is from pharma sector. It is Laurus Lab. Established in 2005, Laurus Lab is one of the leading manufacturer of API, that is active pharmaceutical ingredient, which are used in antiretroviral, that is treatment of HIV, oncology, that is treatment of cancer, cardiovascular, that is treatment of heart problem, anti-diabetic, anti-asthma, etc. Company has forward integrated and expanded into manufacturing of finished dosage or final medicine. It is also into contract manufacturing where it manufactures the API and medicines for top global pharma companies all over the world. Laurus Lab revenue have jumped from rupees 1,160 crore in March 14 to currently at 4,241 crore by December 20 at a CAGR of 21%. The profits have increased from 97 crore in March 14 to 797 crore by December 20 at a CAGR of 36.6%. Laurus Lab had an IPO in December 16, but since then, the share price did not perform well due to negative sentiment towards pharma stock. However, in the last 1 year, the share price has jumped almost 6 times from lows of rupees 65 to currently at rupees 375. It has a current market cap of rupees 20,000 crore. If you look at the future, there would be an increase in demand for APIs for manufacturing of medicine. This demand is from both the domestic market as well as international market and is mainly driven by factors including increase in healthcare expenditure, rise of lifestyle diseases, and companies looking for alternatives of China, with Indian government focusing a lot on Atmanirbhar Bharat or Make in India initiatives. All these factors would continue to drive the growth for Laurus Lab, and it is one company that would become mid-cap and then a large cap. Now next 4 companies are from chemical sector. I tried to reduce the allocation of chemical, but I could not resist including these 4 companies. The major reason is immense growth potential of chemical sector in India. After the COVID disrupted the entire supply chain of the world, there is a new theme that has emerged. It is called China Plus One. It means now companies all over the world want to reduce the dependency from China and the best alternative is India. So this has created a humongous growth opportunity for chemical sector, and it could see a huge wave of growth like we saw for the IT sector in the past. So number 6 company in the list is Deepak Nitrite. Established in the 1970s, Deepak Nitrite is a leading and fastest growing chemical intermediary company with a diversified presence across 3 segments: basic chemical, fine and specialty chemical, and performance product. Deepak Nitrite is ranked among Fortune Next 500 companies and recognized among top 25 wealth created by Fortune magazine India. Its diversified product portfolio cater to segments like dyes and pigment, agrochemical, pharmaceutical, plastic, textile, paper, and home and personal care segment in India and overseas. Deepak Nitrite revenues have jumped from Rs 1,327 crore in March 15 to Rs 4,230 crore by March 20 at a CAGR of 26%. The profits have zoomed from 53 crore in March 15 to Rs 611 crore by March 20 at a CAGR of 63%. Guys, these are crazy growth numbers. In the last 5 years, Deepak Nitrite share price has jumped from Rs 64 to Rs 1,108 at a crazy CAGR of 76.8%. Its current market cap is Rs 15,000 crore. Guys, the biggest theme in chemical sector is China plus one. Especially after COVID, companies all over the world are exploring the alternatives of China so that they can reduce their dependency from China and minimize the business risk. India is set to be a key beneficiary of this shift. India is already the 6th largest producer of chemicals and has all the required skill set and technology to cater to ever-growing global demand for chemicals. There would be an increase in demand not only from the global market but also from the domestic market due to increasing chemical consumption across industries. Deepak Nitrite is bound to grow due to these trends. Number 5 company in the list is Amine. Incorporated in 1979, Amine is a global supplier of amines and amine-based chemicals to the pharmaceutical, agrochemical, rubber chemical, and water treatment industries. Amine revenues have jumped from Rs 236 crore in March 11 to Rs 1,095 crore by December 20 at a CAGR of 17%. The profits have zoomed from 10 crore in March 15 to Rs 252 crore by December 20 at an exceptional CAGR of 40%. In the last 5 years, Amine share has jumped from Rs 300 to currently at 5,300 at an unbelievable CAGR of 77%. It has a current market cap of Rs 10,900 crore. Guys, think this way. Amine products are used as raw material in many industries like pharma, agrochemical, and rubber industries. Now all these industries are going to grow at a good rate. So when these industries would grow, there would be more and more demand for raw material from Amine and hence it would also grow. The Indian amine industry is oligopolistic, which means there are very few players controlling the entire market with high barriers of entry for competitors. Amine is one of the leading players with over 100 products and would continue to grow. Number 4 company is Advanced Enzyme. Established in 1957, Advanced Enzyme is a global leader in manufacturing of enzymes and prebiotic that are used across variety of industries like human healthcare and nutrition, animal nutrition, baking, fruit and vegetable processing, breweries and malting, grain processing, protein modification, dairy processing, specialty application, textile producing, and others. They aim to replace traditionally used chemical with eco-friendly enzymatic solutions. Advanced Enzyme revenues have jumped from Rs 116 crore in March 11 to Rs 479 crore by December 20 at a CAGR of 15.6%. The profits have zoomed from Rs 17 crore in March 11 to Rs 146 crore by December 20 at a fantastic CAGR of 25%. Advanced Enzyme had an IPO in August 16 and it was opened at Rs 284. But since then, the share price was in downward trend till it reached a bottom of Rs 91 in March 20. But since then, it has recovered to the current level of Rs 373. It has a market cap of Rs 4,200 crore. If you look at the future of food enzyme market, factors like better quality food, rising demand of processed food, and increasing awareness about nutrition-rich food have contributed towards the market growth. Not only this, there is immense potential in animal nutrition as well as specialty enzyme used in pharma industry, which would drive the growth for advanced enzyme. Number 3 company is Fine Organics. Established in 1970, Fine Organics Industry Limited is one of the early mover and the largest manufacturer of oleochemical based additive. In simple language, there are many products out there like skin cream, hair oil, cosmetics like lipstick, eyeshadow, etc. that require some oil and fats as raw material. As the awareness for natural product is increasing, there is more and more demand for natural raw material rather than synthetic products. And that's where oleochemical comes into picture. Oleochemicals are compound derived from natural fats and oils that can be used as raw material across a wide range of industries including personal care, cosmetics, coating, adhesive, lubricant, food, pharma, etc. Its revenue has jumped from 778 crore in March 17 to 1038 crore by March 20 at a CAGR of 10%. The profits have zoomed from 78 crore in March 17 to rupees 165 crore by March 20 at a fantastic CAGR of 28.8%. Fine Organics had its IPO in July 18 and since then its share price has jumped from rupees 807 to currently at 2415 at an exceptional CAGR of 55%. It has a current market cap of rupees 7400 crore. If you look at the future growth, there is a huge increase in awareness towards natural, healthy and environment-friendly products in several industries like plastic, food, cosmetics, rubber, coating, etc. For example, in food category, due to busy lifestyle, there is an increase in usage of ready-to-eat packaged food. In cosmetic, there is a growing popularity of anti-aging cream, moisturizing cream and sunscreen, especially in the natural category. And that's where Fine Organics comes into picture with very bright growth prospect. Number 2 company is from textile business. It is Lux Industries. Established in 1995, Lux Industries is number 1 hosiery company in India in terms of volume turnover with a product mix of 5000 plus SKU. It has got more than 100 products across 15 brands including vest, brief, trunks, boxer, thermal, panties, leggings, t-shirt, etc. Some of the popular brands of Lux Industries include Lux Venus Innerwear, Lux Inferno Thermals, Lux Scotch Wood Winterwear, Lux Cozy, On Comfort, Lyra, Lux Touch, Gen X and the latest edition of 1/8 with Virat Kohli. Lux Industries revenue have jumped from rupees 334 crore in March 10 to rupees 1203 crore by March 20 at a CAGR of 13.6%. The profits have jumped from 4 crore in March 10 to rupees 126 crore by March 20 at a fantastic CAGR of 41%. Guys, again exceptional growth numbers. In the last 5 years, Lux Industries share price has increased from rupees 560 to rupees 1830 at a CAGR of 26.7%. It has a current market cap of rupees 4600 crore. If you look at the future, there is a rise in middle class people which represent the biggest chunk of people in India with preference to branded, comfortable and value for money products. Lux Industries cater to this mass segment with quality products at an affordable price. Moreover, there is a rise in the athleisure category where people prefer comfortable clothes. There is also a rise in premium segment due to rising income level and greater spending. Lux Industries cater to all segments from mass to mid-premium to premium and would continue to grow. Number 1 company is from the technology business. It is Affle India. Established in 2006, Affle India is a global technology company with proprietary consumer intelligence platform that delivers consumer acquisition, engagement and transaction through relevant mobile advertising. So basically, this company helps brand to enhance their return on marketing investment through contextual mobile ad and also by reducing digital ad fraud. Affle India revenues have jumped from rupees 167 crore in March 18 to rupees 455 crore by December 20 at a CAGR of 44%. The profits have zoomed from rupees 28 crore in March 18 to rupees 92 crore by December 20 at a fantastic CAGR of 54%. Guys, these are insane growth numbers. Affle India recently had an IPO in August 19 and since then its share price has jumped from rupees 843 to currently at 5347 at a crazy CAGR of 242%. Affle India has a current market cap of rupees 13,600 crore. If you look at the future growth prospect, the future is digital, and digital marketing is the future of marketing. I am sure you all know the importance of digital marketing. On top of that, the future is mobile. So Affle is well placed with its business of mobile-based digital marketing with its proprietary algorithm of insight generation engine and hence poised to grow at a very fast rate. So if we conclude, the top 10 small cap include Happiest Mind, Tasty Bites, Radico Khaitan, Laurus Lab, Deepak Nitrite, Alkyl Amine, Advanced Enzyme, Fine Organics, Lux Industries and Affle India. What are your favorite stock? Mention them in the comment box. In the future, I will make an in-depth video on each of these top 10 small cap companies. And guys, at current market level, most of the stocks are overvalued. So do not blindly invest money without looking at the valuation. Having said this, there is an immense growth potential in these stocks and worth investing the money for the long term. The only thing is to make the right strategy for investment. In the next video, I will discuss the valuation of Indian stock market and the right strategy to balance the portfolio. Till then, take care.